Hey friends, welcome to the show today. Look, to be honest, this episode could go anywhere as they usually do. If you are a new visitor who wants hardcore, scientifically proven spreadsheets, data, if you're an actuary, if you're an accountant, if you're an engineer that just want to know the best way to make money fast and have all the education, I'm not your guy, and this might not be the episode because I'm just catching up with I'd say a friend of mine and a friend of the podcast, Kaur. Welcome back to Pod Vegas.
Thank you for having me. I'm very excited.
Yeah, so look, we're going to catch up. We haven't been on each other's podcasts for a million years.
2 years.
Yeah, 2 maybe.
Which feels like a million.
It does. And it's almost like this type of episode today, it's almost like a Mel Robbins / that Stephen Bartlett. It's just two people chatting.
Who's Mel Robbins and who's Stephen in this episode?
It's pretty obvious. It's pretty obvious. Isn't it?
Well, is it?
Just let them, Sim. Let them.
Okay. Let them. Have you read the book?
No. I get the gist. Or the gist. The gist or the gist.
So maybe you should read more then.
Yeah.
I read the book, and at the end of the book I was like, this could have definitely been an article. But sometimes you need a book like that.
Just let her.
Just let her write the book.
Yeah. So look, we're just catching up today. We've got a heap of topics that we're going to chat about. We're going to chat about Sim's journey, a bit of an update, bit of tea, if you will. Probably not. I'll ask her view on investing, what she's currently doing. We're going to talk about VC and Angel, and Sim's like, we should have a debate.
I like debates.
I don't like debates. I'm scared. We'll just talk about everything. And if you are new and you don't know me or Sim, look, we don't. This is the thing with podcasts, it's not a prison. You don't have to listen if you don't want. But for those who want to kick back, be in on our conversation and have a chat, this is the show for you. This episode is brought to you. Do I do an ad readout? No, I won't today. Can't be bothered. However, my name is Glen James. You are listening to Money, Money, Money with Sim Kaur from Friends That Invest. Let's have a chat, and we'll do that right now. Before we get into it, this show is general advice only, and I've got a license to provide that advice. Full details can be found in the show notes. I'm a former financial advisor. Now I do the Money, Money, Money podcast. If you're a regular here, we call it M3, and we do a podcast called Retire Right. I've got a book, The Quick Start Guide to Investing, is available wherever good books are sold. There's a link in the show notes if you want to turn up your investing to 11, or if you're just getting started. Let's get into it. Thank you so much for being here today. So, Sim, what's news?
Well, I'm in Sydney.
Yes.
I came here because I am speaking at South by Southwest, and I thought, who's in Sydney? Not you.
Not me, clearly.
And so I came to New South Wales.
Yeah.
Oh, sorry, I came to Newcastle.
Newcastle, yes, in New South Wales. And look, Sim's got a podcast, Friends That Invest. We did an episode on her podcast. We're catching up here. We are recording this mid-October-ish. So if, sometimes we date stamp stuff if we talk about things that require that. So what have you mainly been doing with Friends That Invest?
Changing the name.
Yes.
That was huge. Are
you allowed to speak about that?
Not really, but I will say that it's been such a great, everyone has been so supportive and has been so loving about the name change. The book's name's changed, the podcast name's changed, the Instagram's name has changed. And so it's like a fun, exciting journey. And I had someone come up to me and say, I've been trying to get my son to read your book and he wouldn't. But now with the name change, it's an option. So thank you.
Yeah, I think I've recommended it to plenty of people because it's, sure, everyone's got a book, don't worry about that, but yours is good. And I'm happy to recommend it because I know a lot of people don't like my style and vibe, but yeah, it's such a great book. And I think it's important to read a heap of different books and form your own educated view, right?
I have this theory. Someone once asked me about something else. They were like, is it a crowded market to be in? I think they were in the fitness industry. And I was like, well, you're never just going to read or follow one person's views because that would be insane. And you want to kind of get as many as possible. Like I've read so many business books. If I just followed one person, you can't use one as gospel.
And it's also a style and a vibe thing. People say to me the same thing, like, how do you compete with, VD, with She's on the Money in Australia? I'm like, I don't. I'm not some gal talking in a gal vibe because I'm a guy. So you either like me or you don't. I can't compete with you. I'm not a gal in my 20s.
I don't know if I'll be a gal in my 20s very much longer though. So there's probably space for a gal in her 20s to come in. And, there'll be a new gal.
Take the mantle. But you've, the last, say, 5 years since you kind of transitioned into Friends That Invest, you've had some really good opportunities. Why do you think that is? And I'm talking meeting prime ministers of nations. You met the Prime Minister of India. You met the Prime Minister of New Zealand. The last couple of prime ministers.
Yeah.
What would you put that down to, your success? Because your audience is truly global, not just New Zealand.
That's a really good question. And probably a question that I'm not sure I have the answer to. Like recently, I went with the Prime Minister of New Zealand as part of the trade delegation to India to discuss trade negotiations, and there was a business delegation and a community delegation, and I went part of the community delegation, and I don't necessarily know why, and I was very thankful, but I'm not sure. I think sometimes maybe this is a little bit of imposter syndrome coming in, but sometimes I think, well, I probably do fit the bill of being like a really good diversity chick, young woman, brown, somewhat well-spoken, but I think if I could be completely honest, I also know that I'm a very strongly opinionated young person, and I don't mind being strong about my beliefs, and those beliefs have maybe caused me to find my people, but also caused me to maybe be a bit more controversial with other groups of people. But I think when you are super strong in who you are, either people work with it and go, yep, that's what we want, or you can be put in a category a lot easier.
I think looking in, I just think you're switched on. You're sure, you're young, you're relevant, you're educated, but
that should be the title of my next book, Young, Relevant, Educated.
Yeah. YRE, Young, Relevant, Educated. And I think it's the relevance.
Yeah.
You are speaking and people are going, yeah, I get it. Sim gets me.
I hope so. I think a lot of the journey from Friends That Invest also started because I was a new grad that went, I thought that studying really hard and getting a job and a good career should set me up, and studying really hard, becoming an optometrist, there's no way this $75,000 a year salary is going to buy me a home in a country where the average house price is $1 million. I'm going to have to figure this out. I'm going to have to start doing other things like investing and having side hustles and making merch online and selling it. And I think a lot of people that were in a similar boat to me related to that journey.
You talked about your beliefs, how you've got strong held beliefs. Over the last 5 years, and I think it's okay in society if people do change their minds and their beliefs, that's fine. But has any changed for you?
Yeah, so many.
Okay.
I say strongly held beliefs. What I should have probably said is
strongly loosely held beliefs.
Strong opinions loosely held.
Right, okay. Can you give an example off the top of your head of maybe something that has changed, even with your view on money?
Of course.
Because you're quite, as they say, well-to-do. So, yeah, what has changed with your view of money and your belief about money in the last 5 years?
I think a lot of things have changed. I was, when I started my journey of documenting my journey of managing my money online, I was aggressively frugal person, and it was just the way that I'd been brought up. Like, my parents are very frugal. I remember growing up, we didn't have like couches for many years. We had plastic chairs. We didn't have the bed wasn't on like a bed frame. It was like on the ground, the mattress. And, that was only for a few years, and then slowly things got better. And once my parents could afford nicer things, they did. But it just meant I like kind of romanticized or enjoyed the idea of being really frugal, and only when I could afford something twice over or 3 times over, then I would buy it.
That's the bit of the Jay-Z mentality.
Jay-Z, is he like that?
Oh, doesn't he say in one of his lists, if you can't afford it twice, you can't afford it. If you can't pay for it twice, you can't afford it.
Was that in a rap? Or
I
was
think
that
so. Also, quote me, but don't quote me.
And yeah, probably did hear it from Jay-Z. So that was how I grew up, and that was a lot of what my content was. And if you go back, we did like no spend years as part of our content at Friends That Invest, and the idea of, if you can just watch every single dollar, the rest will take care of itself. And my view on that has changed, where I don't mind spending more for a quality item that will last longer. It's that idea that, you can buy a cheap pair of shoes. I used to buy all my shoes from the Warehouse and Kmart because that's where I grew up buying my shoes. And so I was like, well, why would you pay $80 for something that you can get for $12? And that has completely changed because the $12 pair of shoes would then break very quickly, disintegrate. I'd have to buy another pair, and then now I've bought 10 versions of those, and which would have been a better commitment. So now I will buy something maybe more costly, but I'll buy it once and it lasts longer.
Yeah, and that's a big emotional and mental hurdle to first break through, isn't it?
For example, like I didn't really believe in spending too much on health, even coming from a healthcare background, but now I have this like thing called an Aura ring that tracks my health, and it has
I used to have one of them.
Thoughts?
Yes, I vibe. I purchased impulsively.
Of course.
And then 2, I don't like wearing jewelry.
Oh, yeah.
But I think I've resolved if I get married, I'll use one as my wedding ring.
Yeah, this could definitely be a wedding ring. See, like you could just quite easily.
But also there's the argument, just because you can get data, do you need it?
No, and it actually can sometimes cause issues like in healthcare. Doctors not hate, that's a strong word. Doctors really don't like the new trend of people going and getting like a full body MRI for the sake of it.
Yeah, it's a waste of resources.
It's a waste of resources, but even if you can afford it, you will sometimes pick up things that were never an issue, but now you see it and now you feel like you need to fix it, and you're going to possibly have more side effects by fixing this thing, and it's
I get you.
Bit of a train. But yeah, there's been a lot of things. It's been fun documenting my process of not having a frontal lobe to having a frontal lobe online for the world to see.
My frontal lobe was very dormant and not active for many years.
Well, it develops at 26 apparently.
Ritalin helps activate it daily.
Yeah.
So that's funny. Because you started sharing your stuff online, doing Friends That Invest, you were like 24.
Younger.
3.
Yeah, 23, 24.
I look back when I didn't really start to know who I was until I was 25, 26.
Yeah, I feel like that's happening now. I'm 28.
Well, actually, Caitlin asked a question on our Instagram. If you were starting Friends That Invest again today, what would you do differently?
Like as a company or as with money?
Okay, so we'll say you're 28, you are doing well financially from your career as an optometrist. I'm going to start sharing my money wins online today, or learning about money, and I'm going to start a Friends That Invest money page on Instagram. So if you were doing the journey all over again today, knowing what you know, would you do anything differently?
I'm sure I would. I don't know what I would do differently. I guess it would definitely be different from how I started, but I think that's just because of the time. Like 2020 was 5 years ago, and back then it made sense to like have a Facebook group for our community to like exist, and wouldn't do that now. Like it's just not the right platform.
Is it still online, the group, or did you close it?
We still have it, but it's very dormant.
Do you know, I reckon about 95% of applicants in our group are bots and spam.
Yeah. That's what my community manager who like manages the Facebook community was saying. She was like, out of 100 people that try and join, like only 5 are real people, which is very scary. I don't know if I'm sure I do things differently, but I don't know what that would be. I think I would be more cautious about what I shared online. I found that when I was younger, I would share everything and anything to do with money. Like I shared, one year I even shared the Friends That Invest business like profit and loss statement.
I remember that.
I don't know why I did that.
Because you're being transparent and groundbreaking, and
I was like, this guys, like you should see where the money comes in from. You should see what I'm taking as a salary. You should see what I spend. And I just thought I didn't come from that background, so it was all really cool to me, and I wanted everyone to come along on the journey because I have never seen these things before.
Yeah.
And so there was a lot of that, and I don't know if I would have done that again. I think financial transparency is really important and helpful, but at what point does it go from being helpful to just kind of showing off or being like, hey, look at me, this is why you should trust me. I've achieved this certain number and therefore I should be worth listening to.
Yeah, it's I don't know. I think we just evolve and change, and I've kind of gone the other way a little bit. Like I've started to be a bit more personal on Instagram. Like when I was overseas in London, and excuse if I sound a bit nasally, everyone, I got sick before I left London, so I'm still like, you feel fine, but you just anyway. If I sound weird, that's why I was sharing. This is what I spent in London because people like to look in under the hood at stuff.
Of course.
I shared our YouTube revenue. I'm not going to share, and actually to be honest as well, starting July this year at our monthly team meeting, I'm showing the team the monthly revenue.
You didn't used to do that before?
No.
Really? We do that. We share.
I don't share expenses and profit with the team, but I share revenue because they wanted to really get a bit of a sense of what was happening. And I'm like, all right, let's do it, whatever. But I think the reason I didn't before, we were talking over breakfast this morning, with that schema therapy that I did last year, my second highest schema is failure. So that's why I've probably been more private with sharing stuff because I don't want to be seen as a failure. And that's why our podcast numbers, I've never advertised publicly. Or we got, like, sure, there's well over 10 million listens, like huge amount. Sure, the business has turned over more than $1 million a year, and that's public information anyway in the AFR. But, that looks like success. But for me, I was like,
success.
Oh, no, I'm a failure. So that's kind of why I really don't want to get into trying to show off and be better. I just wanted to stay in my lane and do what I can do for my listeners.
I have a question for you. I know this is your podcast and you're interviewing me.
It's our podcast.
Thank you. Money, Money, Money with Sim and Glen. I wanted to ask, how do you balance sharing your views and opinions and your learnings, and then also balancing sharing your lifestyle? Because like you said, people enjoy seeing the behind the scenes. What is Glen like? But you do a really good job compared to, I would say, most of, everyone else in the space, where you still come across so grounded, and you still come across so like, hey guys, I'm just here to help. And also, yes, I've done well for myself and there is this life, but it doesn't feel preachy. You're not like, hey, save $10 here, but don't mind me, I'm on my boat today.
Yeah, I think it comes back to, for every person like you who thinks that, there's probably another person who thinks I'm arrogant. And I think sometimes we can get confused with confidence and arrogance, but that's a whole other thing. But for me, one of the best compliments that I ever get, and this happened in London, like we met London listeners when I went up there and did the show, and one of the best compliments I ever get is you're the same person in person at the show than on the microphone.
Oh.
And then at the end of the podcast in London, anyone want to hang around? I know it's a school night, but I want to grab some ice cream and the drink. So there was a group of us, and someone said, it was like, you're just the same person. Like, thank you. Because I don't ever want to get to the point where I'm not me.
Yeah.
And, audience capture is real in this world, where you do something and you do something that isn't you. It's a signal that people in the audience like, and you end up doubling down and you're captured by the audience. So you end up not being you. So I've probably learned and feel a bit more free now that I was pretty preachy in the early days, and that comes with, being younger. Like, don't do this, don't do that.
Very what's his name? Dave Ramsey.
Yeah.
Like, if you are in debt, the only time you should be in a restaurant is if you're washing the dishes.
That's right. And so I grew up listening to Dave Ramsey, and a lot of wisdom there, practical wisdom. But we've got to remember, everyone, and Dave's been on the show, his daughter's been on the show, I've been to them, like, it's all good. But Dave didn't make all his wealth from being debt-free. Dave made all his wealth from telling people to be debt-free. Very clear difference, okay? But I used to be very dogmatic. It was like, don't have a car loan, don't do this. Now I'm like, look, this is what I do. You can do it this way, but maybe have this guardrail, but also know we lay in the bed that we make for ourselves. So I don't use a credit card for day-to-day expenses. Just went all around the world using my Visa debit.
I'm the same because I know myself.
Yeah.
But I'll have a credit card for my business.
Yeah, and I do the same, just for a variety of reasons. But yeah, I don't know. I just don't want to live a life where I'm a fake and I have to turn on something when the microphone's on. Like, I'm just a guy. Like, do I get it right? Nope. Am I fast and loose with my money? Yep. But I've got fundamentals in the background that I give some, save some, and spend some in that order. It's pretty simple. And if you don't like what I suggest, you don't have to do it. It's really cool. It's really cool that I got listeners who disagree with me, because if everyone agreed with me, I don't want to be in that echo chamber.
That is so true.
Yeah.
I always say that I'm very grateful when we get feedback, because that's someone that cares enough to go, I didn't like this. But instead of just like never listening again, I'm going to take the time out of my day to give constructive feedback. And that's someone that cares and wants you to do better.
Yeah. Like, I think you're crazy to have a 100% growth equity portfolio.
Of course.
Like, I don't do that. But if you want to do it, knock yourself out. I'm not saying you, but
I do that.
There.
And there's nothing, in my opinion, in my risk tolerance profile, that I'm very comfortable with that.
But have you had a major crisis that's really tested your risk profile?
No, of course not.
Yeah.
No, not at all.
Yeah. So, I mean, that's the difference.
That is the difference. It's but in saying that, like my share portfolio, I know that if it dropped 20% in a day, not that it would, because most of it is in broad market index funds, it'd have to be a really bad day where everyone would be down. I know that I'd be okay, because I don't live a life where I need that money until the next 10, 20 years, and I can write it out.
Yeah.
Hopefully. We'll see.
Yeah, absolutely. Well, we'll take a quick break, and then when we come back, we're going to talk about maybe some VC and angel investing and all that stuff. We'll be back right after this.
If you're after personal financial advice, don't get it from a podcast. But if you want guidance tailored to your situation, head to moneypodcast.com.au and click Get Help. We'll connect you with one of our trusted professionals, financial advisors and mortgage brokers, who work with people right across Australia. No matter where you are, they can help. Now, before we get back to the show, a quick reminder to protect your financial life. That means having income protection sorted. It means having death cover if there's any debt or dependents relying on you. It means getting your personal insurance in order. Most people insure their car, they insure their house, but what about themselves? Sky Wealth, who support this podcast, are specialist financial advisors who can help you get the right cover in place. Their advice is often more comprehensive and better value than going direct through your super. Book a complimentary 15-minute chat at skye.com.au. That's skye.com.au, and they'll point you in the right direction.
Okay, we're back. So, Sim, what are you like? You're still doing the investing courses? Tell us about the masterclass.
Yes. So back in 2021, I launched the Investing Masterclass, and I remember launching it. It was like something that I'd wanted to do for a very long time, and my manager, this was October, she booked me into work on Christmas Day.
What?
Yeah, as an optometrist. And at this point, I had done like a financial markets online course through Yale, which is free. Anyone can do it. And I was like, you know what? I've been planning out this investing masterclass for so long. I'm working Christmas Day. I don't want to do this. And I was angry. And I went home and I made that landing page. And I pre-sold it. And I thought, let's just see if this is of interest to anyone. And we had so many people sign up. I thought there'd be like 5 or 10. We had so many people sign up, and I hadn't filmed it yet. I was just pre-selling it. So every week I would film, upload, take everyone's feedback and make it better for the next week, and then take everyone's feedback and make it better for the week after, 6 weeks straight. And it was teaching everyone all the fundamentals of investing, like how to read a analysis of like the income statements and the balance sheet. I had done international business at university, and so I took bits of learning from that. And I figured out that you could learn how to invest in a way that doesn't feel scary, doesn't feel impossible. And I thought, okay, that's cool, done it, closed up. And then we had people say, hey, can you like do it again? I'd be really interested. And so I thought, okay, let's try it again. And so every time I would do it, I would take everyone's feedback and then refilm.
Yeah.
And I did it 7 times over the course of many years. And so it's been going on for 5 years now. And every year I think, surely no one will buy this again. Like, it's done. How many more people in this world want to learn how to invest? But it keeps growing.
Yeah, and I was looking at your Instagram this morning. You've got 666,000 followers. Dun, dun, dun.
Please, someone unfollow us or follow us. The number needs to change.
I just need to go back. So working Christmas Day.
Right?
Was that – so there's communities that don't celebrate Christmas. I get that. Were you working in a community that didn't really celebrate Christmas?
No, I lived in a city called Hamilton, which is a very small town outside of the main cities in New Zealand. There was no reason to be open on Christmas, but there was just like I guess it was like an emergency. Like if you broke your glasses and needed someone. And I was the only out-of-towner that worked in that clinic.
Oh, because you're doing locum, were you?
No, I was from a different – let me say that again. I was the only person that didn't come from that city that worked in that city. My family, I would have gone back home to Auckland. And earlier, because of COVID, my company didn't let me go back up to Auckland to see my family because border restrictions and COVID. And so I hadn't seen my family in like 6 months. And I think it was the first time I realized like I'm just not in charge of my schedule.
Yeah.
And my family are the most important thing to me. Like now I live on the same street as my parents. My uncle and auntie live a couple of houses down the road. Like it's very important to be around that. And so that was the catalyst for me. I was like, never again will I work a Christmas shift.
Yeah, well, amen, sister. So, but the investing masterclass, people can just go to friends@invest.com.
Yeah, sorry, that was a whole spiel on...
I just want to promote your course. That's what I want to do.
Thank you.
And your life story. But
So let me tell you about the day on the 21st of October when my Christmas leave was declined. Yeah, so if you are interested in our investing masterclass, we've had thousands of students take it from all around the world. It's more theoretical and therefore it doesn't really matter where you live. You can still learn about it.
Yeah, it's high-level concepts and whatnot.
Exactly.
Yeah.
And so if you're interested, friends@invest.com, there's a wait list and then we release it a couple of times a year.
Love it.
Thank you.
Well, we'll put a link in the show notes for that as well. Now, let me have a look. I've talked about courses. Before we talk about this debate that you want to have, you're a Kiwi.
Yes.
You have talked about, the brain drain and, it'd be very, like for your career, you could do so much more for your career if you lived in LA, New York or London. Yes or yes?
Yes, of course.
Yeah. Has it been on the cards to move for your career? Where are we at the moment?
Yeah, I remember when I used to talk to you about it, you'd say, just go, just do it. And if it's scary, like you can always come back. And I guess there's two thought processes that have held me back. I remember I went to a house party and I ran into some old friends and they were like, wait, you still live in New Zealand? Like, what are you doing here? Get out.
Yeah.
And maybe it's a stubbornness or a fault of mine, but I think I know what makes me happy, and that is being close to my family, being in a safe, like living in a place where I feel incredibly safe, and being close to a beach. Those are like three important things. And where I live, I have access to that.
Yeah.
But then for my career, it definitely makes sense to live abroad. And I think a lot of young people have this dilemma of, should we go overseas? No matter where you live, should you move overseas or should you stay where you are? And I think I've found, there's always room to move, but I think I found a middle ground where I have such flexibility in my career that I can go overseas a couple of times a year, have that experience, and then come home to the safety net of, home. I also think that there's a weird sense of patriotism that I have to New Zealand, and it makes no sense because I was actually born in India and came when I was 2 to New Zealand. So I'm not really sure where the patriotism comes from, but I really love this country that I'm from, and I feel like I can really help to create change. And, I want to support the country as much as I can and give back in every way that I can, and being able to get involved in different parts of New Zealand, like going with the Prime Minister to
Did you get to go on there at the same plane?
Yes.
It's like the Air Force.
It was the Air Force
One.
plane, yeah.
The Air Force One of New Zealand.
Yes, it is a very, very old broken plane.
Did you have to sit with the press at the back? Did you get to go in the, like...
The Prime Minister just has a normal chair. New Zealand is very humble.
Oh, okay. No, it's not like that's his bedroom, that's the office.
There was no private jet.
No, it's not actually F41.
No,
F4.
it's not like America's plane. We get stranded, like we were stranded in Taiwan, I think, for a bit.
Did you have to stop for fuel, or is it Auckland direct to Delhi?
We stopped in Singapore.
Okay, cool. Okay, so yeah, sorry?
Little side quest.
Oh, just my own curiosity. Okay, so yeah, I think, you resolve that at the moment, New Zealand's home. You can be in LA, New York or London tomorrow if you had to. Because it's weird, when you travel a lot, sure, the privilege is oozing out. But someone said to me the other day, it's like, oh, where were you? I said, I just went up to the US and then across to London. I was only gone for 4.5 weeks. So I was talking like just ducked up there and it was only 4 weeks. But just because we travel a bit for work, it just is different. It's not a big deal, but if you were a 9-to-5er and you only got the 4 weeks to leave a year and you might not have the money to do that, I get it.
I think it's also, that's a good point. I think it's also, it depends on the type of trip. Like if you had said, I'm going on holiday to London and then holidaying in LA, I'd be like, Glen, that sounds incredible. But if you're going for work purposes, then you're on, but you're on in a different time zone with jet lag.
Yeah.
It's like I would, as a kid, I would really idolize like people that worked in those jobs that could go to conferences. I was like, what a cool life.
It isn't.
All I want in life is to be able to be like, oh, sorry, I have to duck off to another city or country for a conference. I still love conferences. I'm here for it. But yeah, if you were going for holidays, then yeah, I think that's a huge privilege. What a fun time.
Well, I was doing a bit of both. Someone's like, business or pleasure? I'm like, business is my pleasure.
It's terrible.
Okay, so VC, angel investing, venture capital, angel investing. all the things.
Mm-hmm.
What's your shtick?
So I saw that someone had asked the question around my views on VC or angel investing and why other people in our industry won't talk
I'll
about
read it. Instagram Ren_Shorty. What made her invest into VC? It doesn't seem as common with other finfluencers.
It's a really good question. I find that when I first started investing, of course, it started off with like retail investing. So people like you and me that go, hey, I'd like to invest in company A. It's a public company. Okay, I'll buy some shares. Cool. I want to invest in an index fund filled with lots of different companies. I can buy it online, done. And then during it was around the year 2002, when I was 7. It was in the year of 2020 when I figured out that, hey, there's these IPOs that keep happening, but I want to make money before the IPO. Like, how do the people get in beforehand? And so that led me on an investigative journey. And in New Zealand, we had 2 venture firms, Icehouse Ventures and Blackbird and a couple of others. And my friend who was a doctor quit her job as a doctor and joined this company called Blackbird. And Blackbird was the company that had invested in Canva. And
they're Aussie, aren't they?
Canva and Blackbird, yeah. So Blackbird is a Australian company, and they had a satellite office in New Zealand, and that's where my friend joined. And it was very, very cool. And I remember once her company invited everyone to have like a dinner and bring your spouse, and her husband was busy. He's also a doctor. So I was her step-in spouse. And so I went to their Sam Wong, who is one of the former partners at Blackbird, went to her home and I met everyone. And it was just this whole new world. And
Aladdin, if you will.
Yeah, quite literally. And, I remember meeting this guy and I was like, where did you work before this? And he was like, I worked at Uber. And I was like, how did you get a job at Uber? He said he applied. I also then met this Geo at Icehouse Ventures. And I think initially I got involved in this world because maybe they thought that I would be someone that they would want to invest into the future, not with friends that invest because it's not really a venture capital company, but they were kind of keeping tabs on me and I was keeping tabs on them.
They got a sniff of your cash.
I don't think they even realized I had any. I was the one that was like, hey, how you guys like invest in companies like Canva? I want to get into that. How do I? And so I went on their website and you could invest and you had to be an accredited investor. And I realized I fit the bill, which you have to have a certain level of wealth or a certain income. And so I spoke with my accountant and he said, yep, you have the requirements. And so I bought my first bit into venture investing and it makes up a small part of my portfolio. So, some people invest hundreds of thousands, even millions. But you can start with, some of these companies allow you to invest with $60,000, $80,000, $50,000. So the check sizes are different.
Mm-hmm. And so your shtick is you wanted to be involved in that personally and you still do that?
Yes. I found that I have a theory that most of my wealth is going to be slowly built over time with my long-term index fund investments. I also believe that in a way of activism, by investing in venture capital and angel investing, I can choose to help grow the next generation of companies by providing them capital, and I can choose companies that really align with my values. So there's a much higher risk involved, and I have the expectation that some of these, if not most of these, will probably go to zero. But it's saying, hey, there's all this new cutting edge technology. Like one of the companies in Europe that I saw was that, is this TMI? Probably not. Instead of taking like a blood test from a woman, you could take a strip off a pad, like a menstrual pad, these special menstrual pads, and that test can then be used as a blood test. And so you don't have to like draw blood. And apparently menstrual blood gives you more data and you can check for more things. And so this biotech startup came out from that. And that would not have existed if you didn't have diverse founders and investors going, hey, we'll give you some money to help you figure this out.
Yeah, I think to the question why more influencers don't talk about it, I think one, they personally don't do it. Like you personally do this stuff. Part of your life, you talk about it. I personally do it, but I don't really talk about it because it's, for me, and I think broadly, you said debatable, I think we agree more with what we agree on than what we don't. So there's that.
The Venn diagram has more overlap.
Yeah, that's what I'm saying. Yeah. I just think for the garden variety person out there who's just getting started with investing, there's no way you would want to really do that with, like if you want to go, everyone, and have a listen to the Friends That Invest podcast that I'm a guest on, we actually talked about Kaur and satellite and all that stuff. So we'll take this comment as read, but you'd really want to keep it to less than 10% of your portfolio, I think. And most people's portfolios, that portion of, say, 10% wouldn't be enough to knock on the door anyway. And if someone did have 60 grand spare to throw into something or get the wholesale certificate, it's probably a huge amount of their worth, even if they did dodgily get in there somehow. Like I think the reason for me is when I've done the stuff, you basically say goodbye to all your consumer protections in Australia.
Yes.
So there's like no safety net. I did this startup once. It was so crazy, right? And I'm all for investing. I love it. I've got different VCs and I'll get in and do all that. But I know, I was looking at one the other day, their annual statement. I was going through, I'm like, all right, well, this is all BS. I don't think it was ever worth $10 million, but here we are, whatever.
It's all paper value. It's all
you're buying
fairy
the
money.
idea.
You're buying the idea.
Yeah, and for most people, pay off your house or invest in your super and get on with your life.
Yeah.
So I invested in one of the ways, and I've shared this on the show, but I'll redo it for the who haven't heard it. I put 25 grand in and I purchased a convertible note, okay? Now, for those who are unaware, a convertible note is basically I pay a company $25,000 and they give me a note that says on this date, this note will convert into shares in the entity or convert to shares in the pre-IPO and all that stuff. At that time, we're going to pay for your $25,000 10% interest payable when we list, when it converts, for every month or every 6 month quarter or whatever it was, I forget the details, that we don't list after 12 months, your loan goes to 20%.
Okay.
Awesome. I'm like, yep, I think they've got something going on here. I put 25 grand in. Now, granted, hugely speculative, hugely risky. If I did lose that 25,000, my life isn't flushed. Mm-hmm. Not putting $2 million in there, not putting 100,000, so that's that. A year went on, issues with the float, issues, blah, blah, blah. So what ended up happening was the company said, okay, we're not floating. The convertible notes, you've got an option. You can get your $25,000 back or your initial capital with no interest payment and you walk away, or we will take your $25,000, not pay interest, and you can have a share in a company, so the note will convert, that will never trade. So it was a poison pill.
Oh, wow.
So what do you get? Yeah, give me my 25 grand and walk away.
And never touch it again.
So I forgo maybe 18 months of any type of return on that 25 grand. Mm. Got the capital back, the convertible note. So for most people, this type of stuff is unfortunately and sadly for the top end of town, but it's also good that it is kind of for the top end of town because of the lack of consumer protections. And I can guarantee most people's superannuation in Australia, your big super funds have investments in projects because, if you're Blackbird and you need cash, where are you going? The $1 trillion, $3 trillion super industry in Australia, all these big super funds put seeds into Canva and back in the day, like your eBays and all that stuff. So we inherently have exposure to this stuff.
Exactly, yeah.
But I just think, most influencers don't talk about it because they don't do it themselves. You do it and you talk about it.
I initially wasn't planning to speak on it. It kind of like came up where I'd be like, today I'm at this event, or today I've spoken here or invested in this, and I just noticed that there was more intrigue than I'd realized, where people would go, oh, this is really interesting. I've never heard someone speak about angel investing or venture investing or private equity. And it's kind of that idea of the same way that retail investing felt so far away and so like only those that know. I found that there was that same, and there still definitely is that same barrier to entry where even those that are sophisticated investors, so that's when I say sophisticated, I don't mean like someone that like holds a champagne flute. It's another word for like wholesale or
so in
accredited.
Australia, I think you've got to prove that your income's over 500 or you've got 2 million of assets or something like that.
Yeah.
I forget the actual thing.
It's like around like 250 or 500 in income and then 2.5 million assets.
Yeah. So very similar.
Yes.
New Zealand, yeah.
And the idea behind it is you should have enough that if it all goes to zero, you have a buffer and the government can't be liable for it all going down. But yeah, that's why I speak on it. And I speak about how it makes up a very small portion of my portfolio. And I sometimes joke that it is gifting money, as in I'm gifting it to these companies because I just don't know if there will be a return. But I enjoy the idea of supporting diverse founders that maybe don't have access to capital but have a really great idea and they aren't getting that money from other places. But do I expect that this is the thing that retires me and gets me on a boat sailing through Croatia? Without a doubt, no.
Yeah, that's the thing. Like you're putting, if you do everything in proportion and you're putting a small percentage of your portfolio in these venture things, for every unicorn that, 1,000 times, there's probably 10,000 ponies and dogs that just don't go anywhere.
I'm speaking at South by Southwest on the returns of angel investing, and that's exactly what the data says. Like they looked at 1,200 angel exits across a 15-year period in the US and the UK. More than 50% of those exits gave a negative return. So if you gave them $10,000, you would get back less than $10,000.
Yeah, all kind of like my convertible note.
Yes.
Capital but no return, or maybe they would say, look, we've got 20 grand, take it, or you can have your notes in a company that doesn't exist.
Yeah.
Pick one.
More than 50%.
Yeah.
And so if someone said, hey, do you want to invest in an index fund and there's a more than 50% chance that you'll end up with less money, you're not going to run to that. Then they said that about less than 10% returned more than a 10x, and then less than 5% returned more than a 30x. Yes, there were some that had a 30x. That's incredible, but they make up such a small portion. And the math behind it is that they hope these outliers will make up for the losses that you make as you spread your risk.
Yeah, absolutely. There's actually a fund. If you did want to kind of get in on this, and this is clearly not advice, and I actually haven't looked at it for a while, but there was a fund that has done very decently. Let me just see. I'm doing this in real time, everyone. The MLC Private Equity Fund. So it's basically a managed fund that you buy into. I don't mind that as a way in because you're getting exposure.
MLC Private Equity Fund.
Yeah, so the MLC Global Private Equity Fund is available for investment by Australian residents only and not for residents of other jurisdictions. The information, blah, blah, blah. So, for example, the minimum buy-in is $20,000 for Class A. The Class B is $250,000. And all of this stuff is like, once you commit your money, call liquidity zero. Call it
Yeah.
frozen for maybe 5 years or more. Actually, this is a different fund. This started in 2020. It must have replaced another fund. But the thing, let's have a look at
A private equity fund or a VC fund?
this is a global private equity fund. I'm just having a look and see if we can see returns here. The thing is, it's one category like with funds like this, right, where past performance is an indication of future performance because their track record of picking winners is there. And once they get to scale, different VC companies know where to go and give people the first bite of the cherry.
Yes.
So that's why sometimes this is one of the asset classes where past performance is an indication of future.
It's also why, like, if you were speaking to a finance pro and you mention Sequoia, everyone will know who Sequoia is because they are a VC firm based in Silicon Valley and they have been consistently investing in all the big companies that we like know and love today, like the Ubers, the Airbnbs, the Facebooks of the world. And so, yeah, you're absolutely right. Then everyone that wants to start something goes to them. And so it just becomes like a monopoly of
Yeah, it just
receiving.
keeps on. Yep. But yeah, so these are like, I would say if you do want to scratch the itch, some type of fund like this where you're putting the money into a fund and not an individual illiquid company that someone's started and I don't know. But I get your edge of the coin with you like the story, the inclusion of giving new founders money. I don't know.
I also didn't start off with individual companies. Putting money in just the same way that I like to think of index funds, putting your money into a venture fund means that your, $10,000 or $80,000 or whatever it is, gets spread across many different startups as opposed to just one.
100%.
If I could, I don't completely trust that I can guess the exact best startup at a pre-revenue stage. That is insanity.
Yeah. But anyway, like it's, you do something different, you get a different result. And I would say for most people, you've already got exposure in your retirement savings. So, yeah, not much of a debate.
That was not a debate at all. I feel like I caved instantly. You were like, that's not that good. And I was like, actually, you're right.
No, like, okay, so like we're both going to South by this week. I put on LinkedIn, hey, does anyone want to do podcast? I had every VC company in the world, well, not really, one person who's like, do you want to do an episode on VC and private equity? I'm like,
no,
not really. Like I've just got a responsibility, I think. Even I didn't like mentioning this as an example because people might see it and go and invest in it. Or I think I've got a responsibility. Like, so for example, now people who want to advertise on our show, it costs me so much money doing this and it's annoying because I like money. Oh, we want to advertise on the show. My first question, how much are you going to pay me? No. The first question is, how long has your company been in operation?
Yeah. You taught me this.
Yeah. If your business has not been around for 3 years, I can't take money from you and advertising your product. Even if it is the most benign vanilla ice, probably would for vanilla ice cream, but like we had one the other day, it was an online will program or something.
Okay.
I'm like, it's harmless and all that. You've been around 10 minutes? Sorry.
Yeah.
I'm just not doing it.
I have something similar. I have the would I recommend this to my mum test. Yeah. And it's, is this an investment that I would want my mum to go, okay, Simran has said this, let me put my money into it. If the answer is no, then it's a very easy way for me to think about it.
Yeah. Okay, so we've had a bit of a chat ski today. I want to end with a voice message because I put on our Facebook group, anyone had any questions for Sim, and someone wrote in like, hey, do you want to do a voice message? And, it's not the song that I made you. It's somewhere else. So I made Sim a song, everyone. You can listen to it on her podcast. I did it with AI. It was pretty cool. Pretty cool. Where are we here? I'm going to play this to you and we'll get your response.
Hi Sim, my name is Manhar. Like yourself, I am the daughter of immigrants. My family moved to Dubai from India when I was 5 years old. And then when I was 19, I moved to Melbourne all by myself to study. And then eventually I have been working ever since I graduated. I have really come to love Melbourne and enjoy Melbourne, but at the same time, something that keeps me awake at night is how accessible wealth is as someone living in Australia, because the taxation is pretty high, not just for employees, but also business owners. And there's also a capital gains tax. Having lived in the UAE for so long, my parents never had to pay tax, but at the same time, I also see them work a lot, and it makes me worried about what their life would look like when they're not working, because retirement is something that only very rich people can experience in the UAE. And so my vision for the future is not to be fancy, crazy rich. I see myself being rich enough to, support my family, support myself and my future family. But the policies and the rules and the laws within Australia make me feel increasingly worried about whether this will be a possibility for me. I'm also looking into alternative sources of income outside of my daytime job, 9 to 5, which is doing freelancing and also starting another business. But I am really not sure about whether Australia is a place where I can still build that kind of wealth. I would love to hear from someone like you who has traveled around the world, but has still chosen to stay in New Zealand, about what your thoughts are on the matter, and any advice would be appreciated.
All right. That was a great comment and question there.
Very good question.
What do you say to Manhar?
I feel like there's a couple of schools of thought that have come up, and it's such a good question. And I love it when people take a moment to step back and go, is my current reality completely set up for me to be successful? Because it's very hard to look at your life from outside your life. And I feel like she's kind of stepped out and gone, okay, this is where I am, this is where I'm building. Is there a better place for me to be, a better career for me to have, a better job for me to do, a better side hustle? She's questioned everything, and I feel like that's a really great place to start. In terms of taxation, so I guess I have a bit of bias here as someone that has chosen to stay in this part of the world where...
Sim's moving to Newcastle, everyone. You heard it here first.
No. I guess there's no right or wrong. My thought is you kind of have a trade-off with either answer. So you might decide, and I have friends that have done one or the other. I have a friend that lived in the UK, and then her career was growing and her business was something that she could do online. And she said, well, why stay in the UK where I'm getting paid well, but my taxes are really high? I'm going to move to Dubai and have zero taxes. Now, the pro of that is I asked her, I was like, why would you? And how does that feel? And she said, well, Sim, what it would take me to earn by working over 10 years, in her view, she can earn that by working for 5 years with no tax. That was her thought process. I don't know if the math really works out because you're shaking your head, no.
I'm not shaking my head about the maths. I'm just shaking my head. I was like, what are we doing here? At what cost do you do what you want to do? That's the question.
And that's exactly...
At what cost?
That's exactly where I'm... That's exactly where I'm going with this. There is, in my opinion, no right or wrong, but there is a trade-off of each side. And so, yes, you can live in a country where the taxation is a lot better, but remember the beauty of tax, or the reason why tax exists, is it's money that the government takes from all forms of income.
We the people.
And that money is redistributed back into making our day-to-day life better. And I sound like I am a government plant by saying that, because
You're a commie.
I am all for, a fair tax system. And so to me, the downsides are things that she has mentioned. For example, it is harder to retire in a country like that because there is no social security. The healthcare is not going to be well equipped to taking care of you if you are old or sick. The schooling systems that are free are not of high quality. And so you end up with a system where it's very every man for himself, and that works really well when you are young and you have a lot of income and you have a disposable income, but it has a downside risk to it. And if you're okay with that, then I'm not here to judge or say that that is wrong, because there actually isn't a wrong answer. It's legal. It's fine. And it works for a lot of people, like the friend that I mentioned. And then there's the other side where you can live in a country like Australia or New Zealand or any country that does have, slightly higher taxes. I would actually say Australian income tax is not that high compared to if you lived in like LA or New York with federal and state tax.
Yeah, and the local taxes and all that. Yeah.
So we're actually better off in Australia and New Zealand. And corporate tax in Australia is actually not that bad either. It's actually in the middle.
Yeah. For most like small businesses in the company tax, sub 30, like 25, I think.
Yeah. It's lower. New Zealand is 28 for everyone equal. Yeah. And so it's actually pretty high, but also not that bad. So on one hand, yes, it sucks. On the other hand, you pay tax. It does slow down the ability to grow wealth. But I would argue that living in a country that has really good resources, social support, and a country that can pay for their people to live well, be safe, be happy, and be educated is probably a better place to grow your wealth, and you can probably grow wealth faster if you are educated, looked after, feel safe, feel comfortable. There's benefits of, in my opinion, staying in a country that has a strong support system. And so in my personal belief, I've decided to stay in New Zealand and, pay my taxes in New Zealand. It is a little bit easier with online businesses to offshore them if you wanted to. And again, this comes back down to my patriotism, which may be slightly unwarranted. But I like paying my taxes because for me, I went to a public school. For me, that was what raised me. When my dad got really, really ill, he had multiple MRIs, multiple CT scans. He got given a free speech therapist, occupational therapist. There were a few others. Someone would come to our home and check on him and practice helping him learn how to speak again because he couldn't speak. And that cost us nothing except they didn't even charge us parking fees. They were like, oh, by the way, going to the public hospital, here's some car parking vouchers because you shouldn't have to pay for car parking. All those things were free. And I remember doing the math. And it would have been if we had lived in the US and we didn't have insurance, it would have been over $1 million worth of debt.
Yeah, it's wild.
For me, it's not a perfect system, but that's the system I like and it works for me. There's also nothing wrong with going, I want to live in a country that doesn't offer that support and therefore I don't have to pay that tax. But then you just have to live with the lack of that support.
Yeah. I think what I liked about her question was she was very intentionally thinking.
Yes.
And this can be a curse of someone who is switched on and smart and strategic. But I like to say you've got to take it back to lifestyle and direction first, and then we plug our money into that, and the tax will be as it may. The rules of the day will be as it may. We don't want to make – I don't think it's healthy for the long term to make strategic life decisions around tax or anything like that. Sure, if you were hugely, a lot of celebrities offshore their residence and all that stuff. And I know people who live in Dubai and don't pay any tax and all that stuff. Like, if you want to do that for a while, knock yourself out. But I just think, what do you want to build your life? How do you want to build your life? If you like Australia, if you enjoy Australia, if you enjoy New Zealand, build a life there, be intentional, and then the cards will fall as they may where it comes to tax.
I completely agree. I have a friend that lives in New York and then spends 51% of her time in Miami because that makes her a tax resident of Florida, which is a zero state tax place. But while she's saving on tax, she has to account for flying back and forth to New York all the time, having a home in New York, but then renting in Florida, account for all the administrative headaches. And she doesn't like Florida. Yeah. So that's probably another huge part. So it's also, why do we try to save on tax? We save on tax to have more money. Why do we have more money? Just so we can enjoy our life. But if suddenly the reason to save tax is putting you in a place where you're not enjoying. Yeah, it's become burdensome. That's where it becomes an issue. But if you have a win-win where you like the place where it also is low tax, then, knock yourself out. Yeah. Yeah, just be strategic. Think, ask your friends and family, but have a plan for your own life and then build your money around that. Because a lot of people, this is what I've been crapping on about for a few months. A lot of people are trying to make the right financial decision and they're getting twisted up inside because they need to make the right financial decision. The right financial decision could be 5 different things. Let's go, well, how do I want my life? How do I want to live it? What direction do I want to go? I'm doing that, then I'm plugging money into that. And you'll take action and you'll move rather than having all this money, I don't know what to invest in, ETFs, probably shares, and not do anything. Just analysis paralysis. Yeah. So plug your money into your life. We might leave it there. Sim, thank you so much for coming in today. Any parting words? My parting words would be that if you are suffering from analysis paralysis, you might have some comfort in knowing that people that suffer from analysis paralysis are often quite intelligent people because they think of all the things that could go right, all the things that could go wrong, then they end up with too much data and it makes them a bit overwhelmed and then they leave it. So you're clearly a very intelligent person and I'm sure you'll be fine in the long run. Absolutely. Love it. Well, you can buy Sim's book, Friends That Invest. We'll put a link in the show notes. We'll put a link to your podcast as well. Thank you. And you can catch Sim on Instagram, wherever you get your Instagram. And we need more followers for Sim. We've got to get her away from 666. Please unfollow us or follow us. Just take action. Move the needle. Take action. Take action. Thanks so much for listening and hanging out, everyone. My name is Glen James. You've been Sim and I've been real. Okay, bye.
Any advice is general financial advice only, which does not take into account your objectives, financial situation, or needs. Because of that, you should consider if the advice is appropriate to you and your needs before acting on the information. If you do choose to buy a financial product, read the Product Disclosure Statement, PDS, and Target Market Determination, TMD, and obtain appropriate financial advice tailored to your needs. Simo Interactive Pty Ltd, the publisher of this podcast, and Glen James are authorised representatives of Money Sherpa Pty Ltd, which holds financial services license 451289. Opinions or comments from any guests on the podcast are theirs and not those of the host or the publisher or their respective license holders.